What is a tax planning strategy? Well, it's the difference between you keeping money and using it to invest or just giving it away and overpaying, because that's the invisible pain that most people have. Tax planning strategies for most people don't exist. Here's most tax planning. You actually do all your behaviors all year. You put all your stuff in a box, metaphorically, and you hand it to a CPA, or you try to do it yourself in TurboTax, or you hand it to H&R Block, which is only for the babies. So if you want to grow up and you want to be a millionaire, you tax plan and you pay for tax planning. So we're going to talk about what is tax planning, number one, so you actually understand it. Number two, what happens without a tax plan, which already you know, because it's the result that's in your bank account or that you've been overpaying. And number three, what does a good tax planning strategy look like in practice, like day to day to day? And it is day to day, because how you make and spend money is going to be taxed. Every dollar you make, depending on how you make it, into what bank account you make it, into what investment account, will determine if you pay tax, and to the degree you do. So let's talk about the definition of a tax planning strategy. It is a written, proactive plan designed to reduce your tax liability through actual legal tools. Tax code provides 81 to 83,000 pages. And put more cash in your pocket. In that book, I talk about the tax loopholes. You can call them whatever you want. But since that book was written, there has been so many revisions and additions, a few subtractions to the IRS tax code. But July 4th, 2025 was probably the best day for anybody who's wanting to be a millionaire or is a millionaire, because it's the big, beautiful bill. It attacked 4 big areas of taxation, estate planning, legacy planning being a big one, double bonus real estate. See, if you think about what does it take to be a 3 to 5 year millionaire, and what's the key assets that are in here that then are attributed to better tax planning, it's owning your own company, an operating company, and owning real estate. Now, gas and oil, aviation, some mineral water rights are all part of that. But if you think about it, in the history of becoming a millionaire and paying the least amount of taxes are business owners and real estate investors. Now, if you're an employee, I'm not saying go quit your job. You also can have an operating company, a cash machine side by side. There's hobbies you have, there's brilliance you have. The fastest cash machine for all of you is to consult, right? To teach somebody or tell somebody what it is you already know. So if you're an engineer, you can do consulting. And a lot of you say, oh, that's just so much more work. Well, then just keep overpaying taxes, because without a company, being employed is the worst kind of money possible. It's W-2, if that's an American term, paycheck money, which means you're going to make it, you're going to get taxed, and then you can live on what's left. Versus you make it in a company. In America, you could have an S Corp, LLC, C Corp, or limited partnership. Your company makes money. You activate the greatest tax code in the world, and then you pay tax. So it's your choice to overpay tax every day that you make this kind of money. So what tax planning strategy is, it's an active engagement with a tax strategist, not just a basic CPA who's a historian who's going to collect all your information and just record what you did. Because every year there is a ticker. It's 12/31 at midnight. So at the end of the year at midnight, whatever you've done prior to that year, it's over. You don't get to go back. Now, we could actually do a 3-year review and look back and say, well, the things you missed, like you got to do a little bit, but you don't get to do the big strategy that I'm talking about. So would you rather overpay taxes to the tune of 12, 15, 30, 50, 100? I just had a client this morning that just came in, paid $1.7 million in taxes last year. So would you rather do that, or maybe on a quarterly basis, you pay $2,500 a quarter, or you pay $500 a quarter? It depends how many companies you have, how much money do you have, and how many assets you have that they have to do a tax return on. So you grow, and that number may grow, but wouldn't you rather pay for a strategy? I call it forecast forward, where you sit and you strategize your plan and say, I'm planning to make this much money. And this is in January or February. So you're not worried about April, because wealthy people live the way we're living. We pay tax in September and October, not in April. So what you're doing in January, February, and March is you're meeting with your tax strategist about a plan. Say, I'm planning to make this much money this year. So what investments do I have to do? What IRA contributions do I have to do? Do I need to have to buy a car? Do I buy more capital? Do I buy more real estate? So it's a plan forward. So at the end of the year, yes, you might have paid $500 per quarter, call it, $2,000. Or for the bigger players that are listening, you might pay $2,500, you might pay $10,000 for the plan, but you just saved $30,000, $40,000, $50,000 and probably had a 3-year review and got another $40,000, $50,000 back. So you either pay for brilliance or you just wander around broke and clueless, which is what most people do. They have no idea the invisible pain. And if you add this number up, for every $10,000 that you overpay in tax for 20 years, invested at 12, 13%, that's 1.1 million you just gave to the government because, oh my gosh, you'd rather pay them and accumulate that 10,000 over there than pay 10,000 for brilliance and then learn how to invest money. So at the end of it, you probably only have maybe a couple hundred or $1,000 tax liability. So it's up to you how you want to play it. What happens when you don't play it? Well, you're experiencing it right now. You're experiencing overpaying taxes in all these categories because you don't have a basic company and you're not investing properly. If you're one of those people where you have a big W-2 income and you have a big 401k, which is invested in the stock market, you have the worst of two evils. You're making the most kind of money that's taxed the most, and you got money in the stock market that creates capital gains. You have actually very little strategy. You have the strategy to make money, and you have a strategy to put money into a 401k that has nothing to do with tax. So while you're here in this channel, I want you to subscribe. I want you to click the notification button. So 5 days a week, my message comes into you. I want you to grab the journal in the show notes and start taking notes on the videos, what you learned, what are you going to do about it, and what's next for you. It's vital that you actually take this serious or not, but then don't complain that you're broke. So there's broke folks and there's wealthy folks. Who are you going to be? It's a choice. And you can use your culture and your background and all your things to make excuses. There's no excuses. It's a so what, now what principle. So what happened to you? Now you're here. Now you're learning. So make a new choice. So the last thing I want to talk about is, what does good tax planning strategy look like? Well, first of all, it starts with a good structured plan from a tax strategist. And you're going to meet with them a minimum of quarterly. The more your net worth, you meet with them monthly. The more net worth and activity inside your accounts, if you're buying and selling companies, if you're buying and selling real estate, you might meet weekly. I meet sometimes daily when I'm in intense transactions. So it's a very intense relationship, focused relationship, because every dollar you make and every dollar you spend has a tax consequence. So there is nothing just passive about this. This is a very active engagement on your part with the strategist. And then just say you double your money by the summer, right? You meet with them in January, February, and you double what you thought you were going to make. That's probably going to require a new corporation. So now you're going to get another company. It might require you to buy vehicles or equipment. It might require you to invest differently. So it's a very active strategy during the year, but then you're in control of it. And when you really get down to the practice of it, and for those of you that are in the big table, this is the work I do with you, is forecast. So you may have you and 4 companies or 3 companies, whichever. Now you have 5 sources of credit. So now you have 4 corporate credit scores. You have your personal credit score. You have bank accounts in all of these companies. You have credit cards. You have an active plan on what company's paying for your phone. What company pays your vehicle? What company are you employed with? What company are your kids employed with? That is not something you decide. You actually have no experience to decide. And it's fascinating how many of you think you are right and righteous and you are wrong. But be right and be poor, or just overpay tax. Good luck with that. And if you have any questions about how to do this, go to askloral.com, ASKLORAL. I also want you to go to another site, brand new, and it has amazing new content. It is called askbookkeepingcoach.com. And there is a course there. It's called Finance for Non-Finance Business Owners, Finance for Non-Finance Real Estate. It's the same course. It's 8 weeks. Do not miss it if you're serious about learning this and really understanding how tax can play a huge part of your life and what a bookkeeper could do in your life. Don't miss it. Go over there and look at it. Now, last thing I want to do is give you 2 tickets, give you a gift for staying here during the whole video. Go to the show notes below and get 2 tickets to my Millionaire Intensive. It teaches you how do you become a millionaire in 3 to 5 years. We'll be back tomorrow.